What is going on, little fuckers? Welcome back to another trade recap. Today we did not take a trade because, as you all know, it is FOMC. So let's load up Forex Factory, and you will see that today at 8:30 we actually had unemployment claims today on Thursday, October 19th. That is right in about 26 days. In about 6 days is when my birthday is happening, the 25th. So wish me happy birthday now and not later. Today is 8:30, right? Unemployment claims came out actually less. And as you see, if actual is less than forecast, is good for currency, which means that we already have a bullish bias here for DXY, which means we should have a bearish bias for SPX. They gave us the bias of the day, obviously. And as you guys know, Mr. Powell, when he speaks, the market goes wild, and he can say anything and anything. And today there was a conference with a lot of other government meetings and stuff like that, and other government officials. So it wasn't just him talking about the prices, but there was this one section, as you'll know, from 12 to around 1 to 2. It was mainly focused on him, and he was speaking about prices, economic calendar, all that stuff. And that's where price really shot up to levels that no one would have expected. Surprisingly, what I had in mind didn't get followed through, but it got followed through on a smaller scale, and I'll explain that. But again, unemployment claims, bearish bias, not too big of a slip, okay? The spread is not bad, right? The previous one was 211K. Then the forecast of this one was literally 1 off, and the actual was not even 5 off. So it really is not that big of a slip. Really not that big of a deal, right? Well, it is a big deal, but it's not. If this was like 100K, we'd be in trouble, and the market would take out previous week low like in a flash. So the reason I say this is, and I'll jump down to the daily real quick just so you guys can see. So this is SPX. I have been testing NQ and QQQ. But so far, the clearest example that I have is on SPX because it shows the best price delivery without being too dramatic or anything like that. Not too sure why there's this white line here. Oh, previous month low, I believe, right? Yes, that is the previous month low, which, previous month, what the fuck? No, this is the current month low. This is the previous. Whoa. Look at that. I just realized a big mistake. So we actually swept through this. Wow. Wow. Okay. So, so for the daily, as you can see, the previous day, we had a high here, and we had a low here. Oh, no, this was the day today. My bad. I'm sorry. I'm completely hammered right now. Right here. This right here are nice bearish candle right here. This was our previous day before opening here. And our low was made right at this 4-hour fair value gap. No, right before this 1-hour fair value gap. And this was the best, most described fair value gap here because it was the one that was seen. Right when you see this daily push up, you would think that there's a fair value gap here, but this actually gets filled right through this wick. So that means that there is some kind of bullish displacement. As you can see, when I see this, I know damn well there's some kind of displacement. I think if we go on the 1 hour, we can see, oh, it's not even, is it on the 2 hour? No, 3 hour maybe? 4 hour. It isn't. Okay, so it's a 4-hour fair value gap. So when you look at it like this, you can easily understand, right? Obviously, if we've even opened before this, you can see that price has come down, has swept these lows, little reaction off of that, and then it has continued come down after and pre-market. And so I'm like, okay, when I hop on the charts, what is the first zone I'm looking at? And that would be this 4-hour fair value gap, which I mark out. And then obviously you have, well, not quite actually, you don't have a breaker block right here, as it doesn't even get traded through or at. But I want you to realize there's also this almost balanced price range. The only problem with this is that this actually got traded through. So this isn't really valid, as, you know, it's not valid, but price did kind of respect this level at least, which I'll go ahead and count it, but I'm going to delete this off my chart because this 4-hour fair value gap is a bit more important. So I knew that if we were, and I told you guys the daily low would get taken out, and if this gets taken out, I want to see a move higher. I'm gonna load up my notes while we're talking so I can show you guys what my analysis was. But I was thinking that I'm pretty sure this was on NQ. I'm not too sure why NQ got swept like it did. Let me restart on this and open NQZ 2023, and I will show you. Yeah, so I was hoping for Asia highs and New York highs to get taken out for buy side, and then we can come down to this previous week low, and even this 4-hour fair value gap down here, and even this monthly low down here. So the final target would be this fair value gap, which price reached perfectly low. London lows would also be a target, but I actually thought that FOMC would take it all the way up here to get the highs, and it actually stopped it right before, and I have the perfect price action explanation for SPX right here. Let's see if my notes will load. Okay. So yeah, nice low reaction off here. Let's jump down to the 1 hour so you guys can see a more consolidation price type shit. We also have this 30-minute, no, is it the 3-hour, 2-hour, what was it? 1 hour? It's a 4-hour again. Yeah, again, so 4-hour fair value gap right here. Boom, boom. Which was the initial target for this. Oh, this was 5 a.m. So 5 a.m. we hit this. 1 hour, my bad. 1 hour, boom, 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 boom. 6 a.m. Obviously 3 a.m. London lows, right? I don't know why it's not marked. Oh yeah, I didn't mark it on SPX, but London lows are down here. So that's one liquidity to be swept. We go up, 8 a.m. Okay, 8 a.m. we tap into this, and this is when I started getting on the charts, 8 a.m. I noticed this. My first bias was, are we going to break through this fair value gap and use it as a balanced price range and inversion fair value gap to move higher? But I told myself that's not possible, because why would we jump off this 4-hour inversion fair value gap when we still have previous week low to sweep, knowing that we were so bearish for literally the past like 3 days? Why would we all of a sudden stop when this fair value gap hasn't even been filled through and there's London lows? So there's 100% chance that price will see lower prices or lower momentum down here to sweep these lows and to really fill this fair value gap. And if we wanted price to come back up, we would need price to even reach down to this low. And you see it tried to go there at London, but it got swept out, went back. So we created London lows, creates more sell side liquidity down there. So again, 8 a.m. we open up here, or we don't open. We get on the charts here. We notice this. I'm noticing it doesn't want to push higher. Comes back down into this fair value gap again. Gets pushed back up, and this is where we open, right? 8:30, or my bad, 8:30, 9:30, right? London lows are right here. 9:30. Where's 9:30? Where's 9:30? 9:30 should be right there. Okay, so we open on this candle right here. As you can see, we create New York highs. And this actually, I was stupid, but this was yesterday's. This wasn't today's. This was yesterday's. So I was targeting yesterday's liquidity, right? And as you can see on SPX, there's these highs right here, these equal highs, and that's what I was targeting. All these are not equal highs. My bad. All this high resistance liquidity right here, these 3 liquidity points, even 4 up here, but these are the ones I was paying attention, was Asian highs, New York highs, both buy side. Okay, even creates a nice little fair value gap here, and has an order block right in the middle. So it's perfect for price to run up. And I do have to say it's a bit unrealistic, because if we were to run up, we would have definitely created a market structure shift, which means that buyers would be in the process of buying. And I didn't really realize that at the time, and I thought it was a little realistic. Unfortunately, it was unrealistic, and it was unrealistic due to the fact that we had bearish news at 8:30, and we yet had FOMC. So if FOMC also was bearish, why would we be buying? That doesn't make sense. All I want to do when there's FOMC and bearish news, I want to hold until 12 happens. I want to hold until Jerome Powell speaks. So that's exactly what I did. And so I waited, right? Obviously, New York highs was created here, and I, realized that after. So obviously that creates buy side at 8:30. So we come down. We almost sweep London lows. We get close. So we're like, okay, this definitely has to go somewhere. This definitely is going to sweep London lows. We're getting so close. We want to sweep this, right? Because there's no point of us reacting off of this like this if we're not going to come back down. There's no area that we hit. There might be a 1 minute fair value gap, but that's going to get broken through later on. Obviously, Jerome Powell is going to speak in literally 2 hours. So there's a lot of liquidity to be swept. 10:30, 11, and this is where Jerome Powell gets in the market, right around here. As you can see from this very big displacement candle on the 30-minute, that's when you know Jerome Powell steps on the screen and just his appearance makes the bullish, the bulls fucking come all over his face, take out not only New York highs, but buy side. It also takes out this fair value gap. And what I was looking for is price gonna tap into it and, inverse and go higher? Didn't, right? So this closing of this 30-minute candle wasn't really important. Well, it was important, but all I know is that it closed lower, definitely lower, and actually closed under this 30-minute fair value gap. If you guys didn't notice that, I noticed that when I don't have everything marked because it would look really messy, but this candle closed lower than this 30-minute fair value gap here, right? And I was watching this on the 1 minute. I'm like, let me go up a few time frames and notice this. And I was like, that's crucial because that shows that the buyers were in progress, and then they sold everything. Sellers were in progress, sellers were in progress, and then closed under this bearish fair value gap. So we sweep it. Not too important because that's FOMC, right? It's a big deal, but it's not like we're gonna just ramp off of it. Possibilities. And what I also noticed is I believe this is a 4 hour. Yeah, okay, so 4 hours. So if you look at this really quickly, I want you to pay attention. And this is just like experience. You have this 1, 2, 3 body move. And as you can see, this looks like a fair value gap. This looks like this right here could be like a fair value gap right here, right? But what's making that not a fair value gap? And if you paid attention, it's this wick. This wick has not only theoretically filled this imaginary fair value gap, but it has basically told that we came down and then we opened and we bought it all the way back up and then we sold back up. But the high was up here, right? Above, basically at this low. So to me, that means that there's displacement and there's definitely a balanced price range somewhere in there, okay? What I like to do is as you saw, I like to draw the range of this wick. So, from the high to the low or the low to the high, doesn't matter, the range, right? I'm looking for the consequent encroachment. Where's the consequent encroachment of this wick? Because theoretically, that is basically the consequent encroachment of this fair value gap, right? Because if we take this, just saying, if there was a fair value gap, the top of this wick to the bottom of this body, see how this theoretical actually works perfectly, right? This price down, this low of this candle right here, the low is 43.51.3, and the high, or the close, or the open, the open of this candle here is 43.30.6. That's where our range is. Obviously, the wick takes everything out, but we can obviously have levels of the wick too. And as you can see, the wick, the consequent encroachment gets in this area right here, this nice little area that we can draw out right here, okay? That's our little consequent encroachment area. I can delete this one. My bad. Let's delete the top one. And as you can see, consequent encroachment of both zones line up quite literally perfectly. Moved on to the hourly. Like I said, I was looking for a balanced price range, right? But as you can see, mostly on the 1 hour, I don't look for anything on the 30-minute or below. But even with the 30-minute, there's no price action here. You can see the wicks are wicking down, they're wicking up. It's really bad. There's no fair value gaps. The only fair value gap is here, really. But this is the one like right above, the one right above this other 4 hour fair value gap. So it's not really valid. So as you can see, consequent encroachment of this fair value gap here, tapped in there, right? Consequent encroachment zone tapped in there. And this was during FOMC, so Jerome Powell was speaking, and price respected that level very, very nicely, okay? So now we see a move down, and I was watching this too, move down, and we move up, we move up, we move up. And this is the part I don't really know how to explain. Like, I guess, like, if we go back to the levels, like, okay, it hits the 0.25 level, but you shouldn't be trading this, you just be watching. I wouldn't be trading any of that at all. And look how price respects. Perfectly hits that, perfectly hits this. Doesn't even close above at all. None of these levels. So it shows a lot of bearish momentum because it doesn't close above all these levels. Yes, it closes above this 4-hour fair value gap, but you have to understand, bro, this 4-hour fair value gap isn't shit to FOMC. Like, FOMC will run through your shit. And I mean, it will run through your levels like it was nothing. Like it was paper. Like, look at this. Ran through, didn't care, ran through, didn't care. We did not care. Jerome Powell does not care. The buyers, the sellers, no one has these fair value gaps. Maybe a lot of people do, but institutional banking don't have these fucking fair value gaps up. We're retail traders, little scalpers, we do, but they don't. They just buy, they sell, right? This fair value gap was nothing on the 1 hourly, right? Hence why it's wicking up and down. And then obviously around, you would hope, right? Because 12 is like around lunchtime basically, right? So 12, you think 1 p.m. would be like fucking nice and low and no one would be trading, and you would be wrong. You would be wrong. And obviously you have this doji. Again, I wouldn't trade during FOMC, but this doji does close below the consequent encroachment of this fair value gap, this 4-hour fair value gap, which we have respected once and then again twice because of closing. The wicks don't bother me. I want to see the closing. I want to see where do we close. And if you look at these equal lows or equal close, we can see that we're basically closing right at the same level of these pre-market or pre-market and market candles. So that shows a very strong liquidation point to me that we are bearish. We have bearish news. FOMC obviously came back bearish with a lot of selling, lots of buying, lots of selling, lots of things getting taken out, right? Because obviously we just took out London lows here with FOMC, so you'd be seeing a huge move up, which we saw here. Hits that level because we already ran through this level, closes under, gets close to these closing or opening and closing levels, closes under the consequent encroachment of this 4-hour fair value gap, tips institutional fair value gaps, and dips. And it will go past these lows because we've already ran through. It will go past this fair value gap, so your target should be this liquidity spot right here. Okay, but that shouldn't be a trade idea. You shouldn't be trading this. You could, but your next idea would be here, and obviously my bias would be this previous week low because it was just so close to us. Okay, so that was the quote unquote trade recap, even though I didn't take any trades. Again, I don't have like a big enough account and big enough, like, it's not ego, but it's more of like risk management and price action delivery and research to do this. A lot of this analysis comes after I hop off the charts, right? If it's a live chart, man, I'm watching that price action like it's my life. You know, I can plot fair value gaps here and there, but like, I need a big screen. Like, my laptop is not big enough. I need a big screen to see this, bro. Like, my laptop does not zoom out. It's laggy. I can't trade on my laptop, nor my phone. My phone is even worse. I can't even see the fucking candles. This is why I do most of my analysis before going to school. Hence why I wake up early in the morning. I'm actually going to start doing that, waking up really in the morning. And also tonight, right, I'll do more analysis, clear up my chart, see what's the price action. Obviously tomorrow, I can already tell you tomorrow, what do we have? Friday. We have no news. So there's no news. So what are we going to do? If you look at the weekly, we've just closed under the previous week low. The monthly low is right there. And we have some we do have this fair value gap here. So we came back to this fair value gap. My thought process here, and I'll tell you right now, my thought is that tomorrow I'm not going to trade because it's going to be choppy. After market and pre-market, it's going to come down to this weekly fair value gap that we've already hit and rejected off. We're going to hit this and we're going to consolidate. And if it wants to go down to this previous month low, go ahead and let it go to that previous month low. As you can notice here, previous month low right here. If it wants to do that, it will. And as you can see, this candle, this monthly candle is already, I can see it come down here. I can see it come down to this monthly low. I can see it come down under this weekly fair value gap. I'll just note this fair value gap is here. this black 2 lines right here. I'll actually mark them like in purple so you guys can really tell where it is. This is the fair value gap that I'm talking about. So price will come and close under that fair value gap tomorrow. And then we will see pricey chop action. And that's what we're going to see tomorrow. And I'm 100% sure of that. Don't quote me on that, but I'm 100% sure of that. I will see you guys tomorrow, and I will update you guys on this choppy price action or even this close under this previous month low. We'll see. Maybe I take a trade. Maybe I don't. We'll see. It is what it is. I'll see you guys tomorrow.